This conference will now be recorded.
Good evening, everyone. Hope my voice is audible to everyone. So, can anyone confirm me? Is that the voice is audible? Please type it as yes in case if you are not able to hear me. Okay. Thank you, Rakshita. So, we shall be able to see with the last class case study which we have been shared yesterday. So, did anyone try? So, please type it as yes in case if you have been tried. If not, no. At least you please type it as no also. At least there should be a response, at least through the chat. Have anyone tried, or have anyone saw that the file was being forwarded through the WhatsApp? Okay, so let me share my screen. So, in which we add on the case study. So, in the previous session, we have been discussed about the Volvo case model, and yesterday we have been looked into what are the information we have it with the Toyota dealership. So, in case if you are going to say that if you are going to invest on this model, so whether it is going to be benefited or not. So let's see that how we can be able to bring up the data into the template what we have been already prepared with. So here we have a predefined template. So let us feed up with all the information. Yesterday we have been done, but still let me feed it up. So there is certain types of products which we are going to sell it through this business. So let me put those information. So I'll copy this content and I'll drop it over here. So it has been added. Okay. So let me add with all the basic information which is there in the case study. So this was the estimate of business. So what all the products we have it and what would be in case if I sell this many number of products every month. So which is going to be a cost of the value. So Prado is going to be 30 lakhs, Fortuner 22 lakhs, Camry 20 lakhs, Corolla 12 lakhs, Innova 10 lakhs, then Ethos Liva it is 7 lakhs the showroom prices, and on this value you may receive only the commission amount. Okay, so let us calculate and see that how much we are going to get as a commission per month if we sell this particular product. So this will be equals to the number of units into the price on this, the percentage, the commission percentage. So this is going to be the value what we are going to get it. So now if I am going to bring up this, so let me calculate this into this value into this. Let me check it out. Okay, so let me bring. Okay, so let me put the value manually. So there was some error in the cell values, so it has been resolved. So you are going to have the values like this. So the commission amount what you can be able to earn it. So by selling this many units into the particular value on which there is a specific commission rate, so that commission rate amount is been calculated in this way. So now what could be the total commission amount that we earn? So it is going to be alt equals. If you are going to use it, alt equals, it is going to be useful for calculating the values automatically which is above the cell where you want to total it, and press enter. So you will be able to earn the commission of 39 lakh 91,000 every month. Okay, so this is going to be the total monthly sales. Yeah, so let me put this value. The next thing is, let's see what are the other informations we have it. So after making the sales, so there is a calculations, so which we will have it later. The next thing is initial investment for the renovation of the showroom will cost you at 25 lakhs. So let me add it. The renovation value is 25 lakhs. And what is the square feet of the showroom? So it is 150 square feet. Sorry, it is rent. Totally it is 15,000 square feet. So the showroom, the dimension or the space what we have been taken, it is 15,000 square feet, and for the godown we have been taken at 30,000 square feet. So can I know that before continuing, so who has been logged in the name as Microsoft account? So can you rename your name so that it will be easy to us to know that who is this? So I request any person who's going to log into the session, please log in with your own names so that it will be help us to give attendance to you, right? Okay, so let us go ahead. So the next thing is, so the showroom square feet is 15,000 and go down square feet is 30,000. And on this, they have been asked us to pay the minimum 6 months rental as a deposit for the showroom. So what is the rent? It has been specified as 150 per square feet per month. So it is going to be 150 into 15,000 into 6 months. So that is 1 crore 35 lakhs is going to be the deposit for the showroom. And for the godown, it is 30 rupees into 30,000, 30 rupees into 30,000. Again, here also it is 6 months rent, which comes up to 54 lakhs. So these are the amount what we are supposed to pay it, that is the investment what we have to bring it to start the franchisee of Toyota car showroom. So let me sum it up, equals to sum of all the values. So it is going to give you at 2 crore 14 lakhs. So this is the minimum, this is the initial investment what we are supposed to do it before starting the business. So the next thing is the rent is 150 per square feet and the go down is 30. The next thing is what are the salaries. So let me give the values. So for the manager, so it is 35,000, 25,000, 20,000 and 12,000. So let me put it over here, and on this I have to calculate the what is the actual amount it is going to be costed to us. So this will be like, press F2 to make an edit of the cell value. Let me equals to 1 into, that is there is number of people required as a manager is 1, so it is 35,000. Again here F2 equals 3 into 25,000, that is there are 3 sales people are required and they are paid for each person at 25,000, where for 3 people it is going to be 75,000. So the next thing is the admin is required 2 numbers, and for each they are paying a 20,000 which value at 40,000. And the go down in charge people are required 3 numbers into 12,000 per person will be paid, so it comes up to 36,000. So sum it up with all these values, so you will be able to get the salary cost up to 1,86,000. Is that everyone understood? Please type it as clear in case if you have understood with this. Yeah, thank you for the response. So the next thing is, so we will calculate with, so what is the maintenance increment as a percentage? So we will check it out with,
Excuse me, sir.
yes, ma'am.
Sir, we are not able to see your screen.
So the screen is not visible.
Yes, sir.
Yeah, just a minute. Is the screen is visible now?
No, sir.
Okay, once again.
So now it is visible.
Now it is visible.
Yes, sir.
Yeah. Okay. Fine. So now we will see that what is the increment in the salary, of what percentage it is going to be increased every year. So let us check it out in the data. So there is an salary incremental every year is 10%, and operation and maintenance will be increased 15% on the revenue value. Okay, so let me add it as 10%, and operations and maintenance will be 15% on the revenue. Then what is the debt value it is going to be calculated? So that it is going to be, yes, Mr. Sham plans to take a loan from bank only 50% of the total investment with interest rate of 13%. So let's see that the debt is going to be 50% and the interest rate is going to be 13%, and the remaining amount it is going to be 50% as an equity. So what they are going to bring the money to the business. The next thing is, automatically it has calculated. So that is the 50% of the total investment on the tool, 2 crore 14 lakhs is 1 crore 7 lakhs, and equity raised is 1 crore 7 lakhs. Okay, so these are the data what we have been prepared for us to calculate the profit. So first we will see with the revenues. So what could be the revenue in this business? So please have a look on the whole data and give me the answer. What could be the revenue? So can anyone try? Have a look on the screen and give me the answer. What could be the revenue of this business? What is the value we are going to get it as a revenue in this business in the given data? So even if it is a wrong answer also, it's okay, but I request you people to at least respond to it, because each and every case study it is going to be connected with the same concepts: the income statement, preparation of balance sheet, cash flow statement, debt schedule. So if you people are going to keep on working out on that, so it will be easy to you to make it clear that how do you get that values, how do you can be able to prepare those statements. So if anyone is ready to share their screen and they can do it, I'll immediately share out this screen which has been filled up with the data to them, or on the WhatsApp group you can be able to download it and can try it. So is there anyone to try it? At least respond to it as an yes or no. How many of them have logged in through mobile? Please type it as mobile. So let me know that how many of them are there on the mobile and how many of them are in a laptop. Okay. Okay. So most of them have been responded. Good. And thank you. And everyone are there. Almost everyone are there in the mobile. Okay. So fine. I can understand your situations. Fine, let me go ahead. So the revenue value over here, it is going to be calculated. What is the revenue of this? At least you can see the screen and you can be able to give me the answer. So that would be also expected. So here the revenue what you are going to earning, it is going to be the commission amount. So whatever the commission amount we have been calculated, it is for total monthly sales. Okay. So this is going to be the every month income. Okay. So the next thing is we will calculate the revenue. So equals to the revenue of the month into totally 12 months. So every year we can be able to expect it at 4 crore 78 lakhs 92,000 amount. So the first year it is this much. And whether there is an increment in the revenue year on year, whether is there is any kind of revenue increment is there, let us check it out in the data. So the sales numbers are expected by 10% increase per annum in the next years. So that means there is an increment of 10% every year. So that it will be equals to the previous year into, open the bracket, 1 plus 10%. So that is 5 crores 26 lakhs 81,200 rupees is the second year. So let me drag it so that you can be able to get the value to the last year. Okay, so let me put it so that, yeah. So the next thing is, what is the rent of the showroom? So the rent of the showroom is equals to 150 into 15,000 square feet. So 150 into 15,000 square feet into, so monthly rental is 150 and 15,000 is total space used into 12 months. So which comes up to 2 crore 70,000. Sorry, 2 crore 70 lakhs is the amount. So is there any increment or increase in the rent? Can we check it out that whether is there any kind of increase in the rental value? So there is no anything such kind thing or in the document. So nothing like that. Let us not calculate once again, we will drag it. Okay. Next, the value for the rental go down, 30 rupees into 30,000 square feet into 12. So which comes up to 1 crore 8 lakh. So which remains the same for all the 5 years. So the next one is salaries. So salary, we have already calculated that per month it is going to cost us 1,86,000 into 12. So which comes up to 22 lakh 32,000, and there is an increment of salary every year at 10%. So which will be equals to previous year into, open the bracket, 1 plus 10%. So we will drag the values. Now the operation and maintenance expenses. So how do we calculate this value is it is calculated on equals to the revenue of that year into 15%. So which comes up to 71 lakh 83,800. Okay, so just give me a minute, I'll be back. Yeah, thank you for being online. Yeah, so it is 71 lakh 83,800. So this it is going to be the same value for the other years, that is 15% on the particular year's revenue value, 15%. So now the operating profit EBIT value. So how do we calculate this? So can anyone try? Operating profit, how do we calculate it? So how do we calculate the operating profit, that is EBIT value? Please try, even if it is
Sir,
wrong,
the
it's okay.
revenue,
Yes, ma'am. Go ahead. Go ahead.
the revenue
Equals
minus
to,
all the expenses.
so
Year one revenue,
minus, yeah.
all the expenses
So sum
from
it up
rentals.
with all the expenses. Good. So if you are going to get the values with this kind of hashtags, so that means there is a value calculated, but the space what you have been given over here, the cell space, it is not fitting with that value space. So what we are supposed to do it is, you can see that between this column and this column, that is I column and J column, there is in between one line. So double click over there, get the cursor over there, and you can find the cursor size. It is going to change. Can you see that the size of the cursor, it is how big, and when you bring in center, how slim it looks like. So please place the cursor like this and make sure that the cursor looks in this form, and double click so it get auto adjusted. Okay, whatever the cell size is there, the content of that cell, at what size it is there, so at that it is going to get adjusted, auto adjusted. So the operating profit for the first year, it is going to be 6,76,200. So let me drag this value. So let me do the same thing. So if you feel it is taking it more size, so please do it manually, that is holding it, and you can be able to bring it. Yeah, so this is how you can auto adjust the value. So let me check. Yes, So everything is visible. So the next thing is interest expense. So now here, whether is it been asked anything that we are going to pay it on the regular basis, or are we paying it at the end of the period? So let's check it out about the loan, what the detail we have it. So Mr. Sham plans to take a loan from bank only 50% on the total investment with interest at 13%, and Mr. Sham will run the business only for 5 years. That means they're not talked about they are going to pay it on regular basis. So they are going to pay so the minimum amount every period. So that means you are not going to pay the EMI or EAI. So for that reason, there is no calculation of debt schedule in this problem. Okay. So the interest expense value will be equals to, what is the debt value is 1 crore 7 lakhs into the percentage applicable is 13%. So that comes up to 13 lakhs 91,000 as an interest expense value. And if I drag this, so I'll be getting a value as 0, because when I drag it, the cell reference what I've taken as C31, so this it changes to D31. So in this case, how do I keep that C31 as a fixed value so that I can be able to calculate on that value only to all the other years? So do you remember with the basics or the advanced Excel what we were being done with in the referencing part? So how do I fix the cell
So we
value?
have to freeze that.
Yeah. So how to freeze that value is, first the value what you have it over here, you should bring into the function mode, that is editable mode, by using F2. And now you bring the cursor on that particular cell address value and press, what is the shortcut key to freeze it?
F4.
F4. So now let us see that it is going to be the same value for the other years. Okay. So now profit before tax, EBT or PBT. So it should be equals to EBIT value minus interest expenses value. So for the first year it is negative balance. Let's see for the other years it is positive. So now when you have in the loss value, before the tax itself there is a loss in that year, so there is no tax calculated, so let us keep it as 0. And the other years, let me calculate at 35%. So that calculates the tax amount. The next net profit, it is going to be equals to uh, PBT minus the tax amount, and drag it to the last. So this is how you are going to calculate the income statement value. Okay, so we have been calculated for all the 5 years. So now we are supposed to prepare with cash flow calculations. So let us have a 5 minutes break and we'll be uh, get back and we will see the cash flow calculations. But before that, I expected from you people, so whether you can be able to bring up the values. So if you possible, you can make a note of it and let me know the value so that it will be easy to us to calculate the cash flow statement at earliest. Okay, so try to bring up the values. We'll be back in by 7:30. So thank you all for being online. Is that everyone are there online? Please type it as me who are all there online. Yeah, good. So only Krupali is there on behalf. Okay, Noor and Fatima is there. Fine. Good, Madhu. So let us go back. So can anyone try to let me know that what could be the first value, operating cash flows or net profit value? So what could be the first value? Can anyone try? So only request is at least if you say a wrong answer also it will be okay. But I want some values from your side, some feedback, some responses.
So the first value will be the loss of 7,14,800.
Okay. So should I give this value in the year zero or year one?
Year 1,
Yeah. So only the income statement will be prepared for the year one to the last ending year of the period. But whereas the balance sheet and the cash flow statement, so this will be prepared from the year zero because there will be certain values which we are going to consider the year, the initial values into the year zero values. Okay. So let me take. So we also refer it as the income statement as a marks card. So that is whatever you have been performed. So that grades will be given, the values will be given. Cash flow statement, it has been called as in your resume. So what is that has happened in the previous year? So your past, present, and future. So we can be able to calculate it on this. Okay. So it was just an refer. So year zero it is zero. Year one I can connect it from equals to the income statement net profit value and drag it till the fifth year. Okay. So the next amount. So what could be this amount? Initial investment amount. Can anyone try? So do we have anywhere this amount? Did we calculate it anywhere with the initial investment amount? So anywhere it is there in the screen. Can you find the value? What is the total investment we had been brought at the beginning of the business? So what do we call the money which we
2
bring
crores 14
to?
lakhs.
Yes, ma.
So the total capital 2 crores 50
Yes.
lakhs for
So the
14
initial,
lakhs.
Yes, yes. So the initial amount what we bring to start the business is called as capital. So that amount we are supposed to connect it over here. And here, when you say that it is an investment, that means I have to spend that much of money to start the business. So cash is going out of my hand. So in that case, in the cash flow statement, anything goes out of hand, so should be given in the negative symbol. Anything is coming to the business, it has to be positive. So minus 2 crore 14 lakhs. Then, did we invest every year with any value? Do we bring any value every year? Whether we are supposed to invest it every
No,
year with,
sir.
okay, so it is zero for the other 5 years. So only before starting the business we have brought this amount. There is no further amount has been brought into the business. Good. So the next thing is debt amount issued and repaid. So let me give it as debt amount brought and debt repaid. So how much did we brought as a debt?
1 crore 7 lakhs.
So it is 1 crore 7 lakhs which is there over here. So whether this amount has to be given in the positive or in negative.
Positive.
It should be in the positive because the debt amount, the loan amount what we got it was been received in the initial stage, so it will be in positive. And the same time this amount is being paid back after the 5 years, so the fifth year it is going to be paid back. So this amount will be equals to minus the amount what it has been received. So it is minus 1 crore 7 lakhs. The next thing is at the end of 5 years, deposit amount would be returned. So what is that amount we are going to get back? So can we find any amount which can be repaid? Is there any amount which is repaid? Is there any data over here that can be repaid, which we are going to get back the
On the
money?
deposit account,
Yes. So deposit of
showroom and go down.
showroom and go down value. So let me take this. So equals to the deposit for the showroom was 1 crore 35 plus 54 lakhs for go down. So the value is 1 crore 89 lakhs. Okay. So yeah. So these are the amounts what you are going to bring it as an cash flow statement. Now the total cash flow will be equals to sum of all the values are available on the cash flow statement. Close the bracket. So the initial is 1 crore 7 lakhs with the negative value. So drag this. So you'll be able to get at the fifth year the cash what we have with us is 1 crore 93 lakh 42,303 rupees. Okay, so with this value we can be able to calculate with IRR value. So this will be equals to IRR and select the values related to the net change cash flow or the total cash flow what we have it for this years. So the IRR rate is internal rate of return is 30.23%. Okay, so this is how you are supposed to calculate the internal rate of return. So the expected return on investment we can be able to have it at 30.23%. Okay, so there are certain questions it has been asked. So at least can you try to answer for this? So what is the total investment required for this project? So as per our calculations till now, whatever we have been done. So what is the total investment required?
14 lakhs.
So it is 2 crore 14 lakhs. Good. Is that correct? Yeah. So what will be the cash available at the beginning of the fourth year? So what is the cash we have it at the beginning of the fourth year?
47 lakhs, 87,381.
Yes, 47 lakhs 80, 87,381 because the values whatever we have it, it is of all the closing balances. So the year 3 closing balances will become as a opening balance of the fourth year or the next year. So let us give that value. Yes. So the next question is how much of equity was been raised?
One crore 7 lakhs.
So 1 crore 7 lakhs that is 50% on the total investment. So let me calculate in that way or I can give it direct value also. So it is 1 crore 7 lakhs. Good. The next thing is what is the revenue in the third year?
The 47 lakhs 87,381.
Yes, once again it is 47 lakhs 87,381. 381. Good. The next question is, what is the internal rate of return if the debt percentage was 60%? So here we have one table. So the table, what I think this table, it is not available on your uh, Excel sheet what I've been shared yesterday. So I've just added this as an additional kind of references. So which commonly it will be used to just forecast in case if there is a debt on the percentage of interest rate. So suppose if I take, so as of now, what was the debt percentage?
50%.
It was 50%. So suppose if I would have taken the debt at 60%, so that means 2 crore 14 lakhs into 60%. So on this, if the rate of return was 13%, so what could be the IRR value? As of now, when we have taken the debt percentage of 50% and the interest rate was 13%, so the IRR value is 30.23%. Okay, so what could be that value you are going to get it when it is a 60%? So let me color it up. Yeah, so I think let me make it little bit highlighted color. Yeah, fine. Suppose if I keep this, so if I would have got the 60% debt and the interest rate is 13%, so what could be the IRR value? So to do this calculation, so first I have to bring here what is actually the IRR value. So that is equals to the 30.23%. That is the value what I have been got it. Now if I want to feed up this value, so I have to select the whole table, and now you can be able to go to the data tab, and here you have it an option called what if analysis. So you can click over here, and here you can be able to choose an option called data table. Okay, so now can you tell me on the row values what do we have it? So it is interest rate. So let us check it out. What is the interest rate value? That is 13%. So give me that cell address value, and column input cell is 50%, and click on OK. So now let's check it out. So the row value was interest rate and the column value was debt rate. Okay. So there is a calculations found out over here. So when there was a chance of 60% of debt, so whether the IRR, the internal rate of return, was higher or lesser. Can you people just check it out with the filled up data? and let me know whether IRR was higher than existing IRR or lesser than existing IRR. So hope you people are able to see the screen.
So higher than the existing IR.
Yes. So when you increase with the debt rate, so you can be able to expect more. So when you are having a lesser debt rate, so it is going to be the lesser IRR value. Okay, fine. Hope you people have understood. So let me feed up this answer. The internal rate of return, if the debt percent was 60, it is 33.83%. Okay, so I'll share this document to you people for your reference. So you can just go through with it, and in case of any kind of doubt, you can be able to get back to us. Is that fine? Is that clear to everyone?
Yes, sir.
Okay. So thank you all. Have a wonderful day. So we'll meet on the next class will be on. So the next class will be on Friday, right? Yeah. Okay. Fine. Thank you all. Have a wonderful time.